India's housing market faced many challenges in 2025. According to ANAROCK, while home sales in the top 7 cities dropped to 14%, the overall sales value of housing units saw a 6% yearly jump. This means value rose and volume of sales decreased. The decline came due to higher property prices, layoffs in the IT sector, geopolitical tensions, and other economic uncertainties. Sales fell across major metropolitan cities. Mumbai metropolitan region down 18%, Pune down 20%, Bengaluru down 5%, Delhi NCR dropped by 8%, Kolkata down 12%, and Hyderabad down 23%. Only Chennai was a city that saw a rise of 15%. As per the report, among budget categories, both the demand for and supply of luxury housing rose in 2025. The post-pandemic trend towards bigger and better homes by branded developers clearly continued. But new launches in the top 7 cities only saw 2% annual increase. In the backdrop of these data points, I spoke to Dr. Prashant Thakur, Executive Director and Head Research at ANAROCK Group, and Manan Shah, Managing Director, MICL Group. Here's that conversation for you. Given the 14% drop in housing sales volume across the top 7 cities in 2025, what specific data points from ANAROCK's research indicate how IT sector layoffs contributed to this decline?
I think 2025 was, a year of contradiction for real estate industry, I would say. While the entire 2025 saw a decline of 14% in volume, it might paint a picture that something is wrong. But when you look at the sales in terms of value, I think there is an increase of 6%. And then, this increase in overall value was led by NCR market, where we saw a jump of 58% in terms of value of real estate sold. There are a couple of, reasons behind it. Number one, the share of luxury real estate, bigger size, bigger format houses, have definitely increased in the overall share. So if you look at the overall launch data, 40% of the inventory that came into the market were priced 1.5 CR and above. And out of this, if you see 10% of the entire inventory that was launched was more than 4 CR. So I think we need to kind of dig down deeper and before arriving at a conclusion or a verdict that we are seeing a slowdown in the industry, what the trend is clearly emerging is that the volumes are stabilizing, but the market breadth in terms of value remains strong. The question is that how long this trend will continue is something to ponder about, because when we look at the overall job growth and job data, things look a bit shaky. And as you rightly mentioned, that IT layoffs, the impact of AI and other aspects on job prospects, especially on ITS sector, has been quite stark. And that's the reason, if you look at the cities which are IT and ITS driven, have seen some impact, to mention Bangalore in particular. But on the other hand, if you look at the launch pipeline and the mix of developers, there also has been a year where the grade A developers have consolidated their position. And there has been a trend where the strong developer with strong balance sheet has increased its footprint. So I would say, after 3 to 4 years of very rapid growth, both in terms of value and volume, we are seeing a trend where the volumes might stabilize, but the trend in increase in value would continue, and it's primarily due to the mix of luxury and high-end segment increasing. But to support this in coming years, I think the job growth prospect has to be strong. And I'm right now, what I believe is this: all these negative headwinds that we are seeing in terms of geopolitical tension, impact of IT on ITS, as a passing phase. Because if you look at the fundamentals, we are still a housing deficit country. So somewhere, I think, as we enter 2026, we enter with certain headwinds as well as tailwinds, and couple of things which I would say makes we feel that the industry will continue its growth is, number one, as I mentioned earlier, that grade A developers are kind of emerging quite strong. They have the best balance sheet ever. Their debt to equity ratio is the lowest as of now, if you look at in last 20 years. And the land acquisition that has been done in 2025 is close to 3,300 acres, out of which percentage for residential.
All
So,
right.
while these were the trends which indicates towards decline in volume, but I think we are reaching a stage where the industry is stabilizing and the growth remains stable.
Right. You have pretty much summarized whatever the report actually highlights, and thanks so much for setting the tone for the conversation. Mr. Shah, as a developer focused on premium projects, how do you see the 14% decline in overall housing sales volume in 2025, particularly in high demand areas like Mumbai metropolitan region?
See, Mumbai is divided into multiple micro markets: South Mumbai, Western suburb, Central suburb, and each location is acting on its own. So, say for example, we are operating in Ghatkopar, also we are operating in Tardev as well. Now we've recently launched a project at BKC. Tardev, we've seen a response in the last 1 year to be more than 50% of the units getting sold. Even Western, the demand was continuous. The reason for the sales value to go up is there's a very honest submission where the acquisition cost for every developer has gone up. So especially when it comes for redevelopment, the areas which the developers have been offering to acquire these projects have gone up. So you will see Mumbai's pricing in terms of the sales value will definitely go up in the next 2 years as well. And it will continue to remain, the sales price would continue to remain, in fact, increasing because the acquisition cost is higher, unless there's some global pandemic again coming down and crashing of these prices. But otherwise, we see a very strong momentum where the pricing continuously going higher in Mumbai city, especially in the luxury pockets. Regarding the economical pockets, for example, we have a project at Dahisar where we have last year sold more than, I think, around 400 units. Coming in the festive season, especially post October, yes, we see a decline in terms of walk-ins because people are either traveling now, celebrating some of the other occasions, wedding season coming up. So we've usually seen this trend at the end of the year, post September onwards, October onwards. Every year we see some sort of a decline coming in, but again it starts picking up from February, March onwards. Right now, Mumbai, if you see as an overall location, it's still good, I would say, compared to the other pockets, because Mumbai has always been a favorite city for a lot of Indians. When they want to migrate out of another city, tier 2, tier 3 city, they always prefer Mumbai as a location. We operate specifically out of MMR. We don't have projects in Thane and Navi Mumbai. But in these pockets, I don't see much challenges because for us as MICL, majority of the inventory is sold. Yes, the competition is coming up. Oversupply will flow in soon in a year or two. But time will say when we'll have to find out maybe like a new set of customers coming in, maybe from outside the cities to sell them.
All right. Interesting point made. Mr. Thakur, I'd like to ask you a question based on 3 data points. One, that home sales in the top 7 cities have dropped to 14%, but at the same time, value of housing units have increased by about 6%. And the report also highlights that demand for luxury housing segment has increased. When Mr. Shah was answering my question, he answered the point of economical segment as well, that part of housing as well. I'd like to ask you, since you're in the real estate segment and you observe this so carefully, do you think we're moving into a time where builders are not focusing at all on the mid-segment housing because demand for luxury has increased so much?
See, we cannot blame the industry. It's the nature of industry. That product which is in demand, as a developer, I would like to focus on that. Right. And what Mr. Shah said is also correct. The land acquisition costs have really gone up. The cost of construction has gone up, and post-pandemic, there was a disruption in supply chain. The material costs have also gone up. Right. And then what happened right after post-pandemic, the trend that we saw, while affordable slipped, it was luxury that was really pulling up the market. And the reason for affordable, seeing a decline was that post-pandemic, while upper and mid segment saw a good income revival, the mid segment, especially people working in SMEs and MMSEs, still struggled, right? And that's the reason we saw a decline in demand. And a couple of other factors also were responsible. The SOPs given by government for affordable housing came to an end. And then, schemes like interest subvention schemes, tax break.
I just want to interrupt you just for a second and ask you, because you have been talking about high demand in the luxury segment. And this is what I sort of struggle to understand. at a time when we're reporting that sales have dropped significantly, let alone the value of the property increasing. But when sales drop significantly by 14% on a year-on-year basis, what does that signify? Isn't that a symbol of demand denting a bit?
See, I would not say demand denting a bit. I would say it's a K-shaped movement that we are seeing, where the bottom of the segment is still struggling, which I think is really unfortunate. And then where if you see upper segment is pulling up the market, and that's the reason you're seeing a decline in volume. The sizes have gone almost up by 25 to 30%, and the price have also gone up, and that's the reason, in spite of a decline of 14% in absolute volume in terms of number of units, you see an increase of 6%. It is primarily attributed to the share of luxury. And to answering your question, I think this industry right now can be segmented into two parts, where you can confidently say that the upper segment continues to perform quite well. The bottom segment is, I would say, are technically priced out of the market. And the prime reasons for is that the prices have gone up, right? And then the income level of those buyer segment who were the prime audience for affordable and budget segment, they're kind of still struggling. And this is not the phenomena only in real estate. If you look at automobile, if you look at any other consumer goods, everywhere you'll see that the premium and high-end products have been doing well. While
premiumization as a trend,
yes,
as a trend has been
exactly,
pervasive across industries, and that point I note. But Mr. Shah, very quickly, I'm running out of time on this conversation. With property prices rising amid IT layoffs and geopolitical tensions, as the ANAROCK report highlights, what challenges has MICL faced in buyer sentiment, and how are you really addressing them?
So the major concern which now drop is earlier the buyers used to be satisfied with some sort of amenities which were offered. Now the buyers much more traveled, much more aware of the global situations as well. So sometimes we see customers traveling in from UK, sometimes from Singapore, and they see certain sort of amenities and something that's trending over there. Like a very small example, earlier the gyms used to have weight training section and cardio section. Now there's Pilates, there's yoga, there's Zumba. These are very small things which the customer is very picky about. What is his lifestyle and who connects to him is where he wants to go and ideally buy the house. And now, because there's a buffet of developers in much micro markets operating, there's a TAT time, which we call it, which is a conversion time. So the conversion time, which was typically a month or two, has now increased to 4 to 5 months. And that is a major reason you're seeing the volume going down, but the value is still up high. So even the 3 BHK earlier in Mumbai city used to be around 900 to 1,000 square feet. Now, in fact, the developers are taking up the challenge where there's a larger demand 3 BHK. So the developers have in fact made 1,300 carpet to 1,500 carpet 3 BHK as well. And it's selling very well. So that's the whole situation which is being formed right now. And everyone, including us, we are focusing on the sales, because eventually if I'm making a smaller ticket size house and there's no demand for that, we won't make good money.
Point well noted. Thank you, Mr. Prashant Thakur, as well as Manan Shah, for giving us your valuable insights into this report and helping us understand how real estate has been panning off through the course of 2025, but also helping us also understand how it is set to take course in 2026. Thanks so much.